Hey, happy new year and welcome to stock investing and stock trading in 2025. It was an interesting day today. I call it a head fake day where the stocks opened higher. There was a good number of buyers, and probably after a few hours of trading, stocks gave up those gains and actually went into the red. Went substantially into the red, and then they recovered some. So they ended the day down with the Dow going down 0.36%, S&P down 0.22%, and then the Nasdaq down 0.16. The Russell inked out a small gain for the day, so small caps are off to a good start. Depending on where you were invested, the day played out differently. Energy stocks really did well, and consumer discretionary did not do well. So it was an interesting first day. It is a continuation of the sell off that began in 2024 at the very tail end. And we're down 5% already on the NASDAQ. So, is this the beginning of a correction on the NASDAQ? Well, we will know. We will know as we continue on the month of January. It'll be interesting to see where the market goes, but it's understandable that after having two stupendous years of 2023, 2024, just absolutely awesome years for stock appreciation. For the market to give up some of its gains is not really out of the question. It's got to give up some of the gains at some point. Stocks do not go up in a straight line. They usually have a kind of a zigzag effect, and sometimes the pullbacks are more substantial than others. So we'll see. We'll see if this thing is going to keep selling off or what's going to happen. Crypto moved up today. It's up to roughly about $97,000 a coin. That is very good. That caused a rally in stocks that are tied to Bitcoin, cryptocurrencies. And one stock that I wanted to look at, two of them that are tied to Bitcoin are Robinhood and Coinbase. I'm going to look at those two stocks on the stream. Both those stocks I own, and I wanted to take a look at them. Those two stocks were selling off in December and now have started the first day of trading in 2025 on a positive note. There is wanted to show the sectors. These are the sectors, all 11 of them. Where were stocks performing best? Energy. Well, that looks great. Up 1.47%. So let's look at Chevron stock. Utilities did well. Communication services, of course, Meta is a big player in that space, and Meta had a fabulous day. Just an absolutely fabulous day. Trying to see what other stocks in that sector are on my radar, but I think that's the big one. Meta is my biggest holding in my portfolio, so it went up substantially. So let's take a look at that one. Healthcare was okay, 0.26%. It was a red day, so if you're in the green, it's a win. But healthcare has struggled for 2 years. I'm beginning to think, what goes down may go up. And healthcare presents really good value. I think value stocks are a good place for me to look at here in 2025. To expect that growth stocks are going to continue to grow, continue to go up, and go to the moon may be irrational to some extent. And value stocks are presenting a pretty good proposition. Hey, go up. We'll probably see value stocks do okay in 2025. And I'm okay with okay. Considering that the risk in technology, high growth stocks may be very high. Again, we've been up for 2 years. And to expect that stocks will continue to go up is potentially a risky proposition. So we'll see. So value stocks are looking good to me. There's value stocks in healthcare, a lot of good value stocks down in industrials. I liked some industrial stocks that are out there. Decided to buy into LMT today, which is Lockheed Martin. And I also started buying into Union Pacific. I've been wanting to buy into Union Pacific for some time and finally pulled the trigger and started a position, dollar cost average in my investment in those. So we'll take a look at those stocks as well. All right. So thank you, everybody who's joined. I appreciate it. And just to do a quick overview on my channel, I operate a channel where it's primarily long-term value investors that are looking to grow portfolios year after year. I do fundamental analysis on the companies I'm interested in, always just sharing my point of view as an individual investor, never giving financial advice, never recommending you buy, hold, or sell any particular stock, just sharing my experience. I've started the channel a couple of years ago, and I've started a community where you can sponsor that community. You can be a $10 sponsor, $25, or $100. And you get different perks. One of them is on live streams. If you want to put up a stock symbol, your name will appear differently when you come on the live stream. I will definitely try to get to that chat message and cover that stock that you're looking for. If you're a super investor sponsor, there's a lot of perks involved with that. So consider those. You can get more details on the details of the live stream. And I appreciate you attending, and I appreciate your interest. All right. So let's take a look at a few individual stocks, starting with Coinbase. And I'll take a look at what happened with Coinbase. What caused that stock to jump up so high? Let's take a look. All right, so Coinbase was up 3.59%. Coinbase is an exchange for cryptocurrencies, and there's a lot of things that were, when I started investing in them, which was roughly about 2 years ago, it was quite a risky proposition. Was their business going to work out, and how big were they going to be, and so forth. A lot of things have played out well for Coinbase. I like a lot of things that have happened. Market cap's gone up really nice. In the 1 year, it's up 48%. It's really gone up nicely over the last 2 years. Revenue, they're up to $5 billion in revenue. Earnings per share, their P is a little high, 46 is a little high. And they really have a lot of volatility. Beta, 3.57. That's a lot of volatility. And analysts still think it's a little bit discounted, which is interesting. So we've got a stock that has been going up for the last 12 months, had a good day today. I do like that the Coinbase continues to grow volumes as well as the types of products they're selling, some of the partnerships they have. For example, now that bigger institutions are wanting to put Bitcoin ETFs together or selling Bitcoin directly on their brokerages, they're using Coinbase as a partner to actually execute those trades. And that's a lot of institutional volumes for Coinbase. So that's a new business category for them. So that should really do well for them. And I really like that as a new revenue stream for Coinbase. So they're growing at 90% if we look at the trailing 12 months, which is great growth. So that PE at 46 doesn't look as crazy when you have nice growth. Now there is instability in those growth rates. You could see that they were growing a lot. Bitcoin had a sell-off, pull back in 2022 along with stocks, and you saw revenues really come down. But now that Bitcoin's really going up in stock price, man, you can see their revenue really growing, which is great. They are profitable and they do provide free cash flow. Now, for a newer company, they're newer, to have free cash flows is quite impressive. For a new company that's creating a brand new category, to have free cash flow, you better believe that's really special. So I take those free cash flows and I'll show you the valuation that I have for Coinbase in a bit. So those are the things that drove me to buy into Coinbase. As I saw the free cash flow coming into the picture of this new company, and it really made me believe in the company, and I'm glad I invested. So they have very good margins of 85% gross margins, excellent gross margins. That's like a software company. So it looks awesome. Good free cash flow, growing top line revenues, growing in the number of products they sell. All of those things look good, and they have very good gross margins. Analysts really focus on the earnings per share side of their performance. And earnings per share for fiscal year 2025, it's expected to be $4.37. It is a little bit of a pullback, but I'm expecting they're going to outperform that number. Just a lot of things are going Bitcoin's way. The price continues to go up because we have a lot of things that are helping Bitcoin. First and foremost is government. Elected officials really like Bitcoin in the White House, the Senate, and the House. And I think it's really going to let Bitcoin run going forward, which will be really interesting to track. But I think they're probably, Coinbase is probably going to surprise to the upside, probably going to have favorable surprises in 2025. So that looks really good. All right. So that's what analysts think. It's a little bit discounted. Had a very good day. Good to see Coinbase do that well. Let me show you what I've got on my valuation of Coinbase. So I think at this point, Coinbase is discounted by 10%. I've put together a free cash flow forecast that I expect free cash flows on Coinbase. I'm growing them at 25%. They're growing revenues at 90%. They have more products. They have great margins at 85% gross margins, really good gross margins. So this is, if anything, could be a little bit of a conservative forecast that I'm putting together, but that's fine. Their free cash flow really drives a good valuation, and the stock is discounted by 23% if I look at free cash. If I look at their earnings per share, I don't think the earnings per share could support the stock price number. So it's a little bit priced at a premium, but if they outperform that number, I think they will be just fine. I think the stock will continue to rally. So a 10% discount available on a really special company, the leader as a cryptocurrency exchange. I mean, that's phenomenal. And I'm good having the leader in the space, just doing great. And that is Coinbase. I'm glad that I had it. It helped me operate in the green for day one. It's only one day, but I was in the green today, which is good. The rest of the market was in the red. And thanks to Coinbase, among other stocks. So that is Coinbase. Android PC, good to see you. And hopefully you had a good day, Android PC. Now let's take a look at Robinhood. So Robinhood had a very good day, up 5.85%. Why was it up so much? So they're poised to win as risk-taking increases. Interesting. And, it's no secret Robinhood is a new style of brokerage. It's not your father's brokerage. It's more like the new generation of investors. A lot of them like Robinhood. And I have a Robinhood account. I'm a Robinhood stockholder. But their UI doesn't make sense to me. I'm an older dude, so I like maybe a more traditional UI that's more like spreadsheet looking. Nonetheless, I'm glad that I bought Robinhood stock because I thought it was going to grow, and it did. Market cap is about 33 billion, and the revenue is 2.4 billion. Their PE is getting a little high. Their stock has done well for a year, and their PE has gotten rather expensive. Analysts think it's fairly priced, just slightly discounted. And the reason the stock's really worked is the company's really grown, and they're coming out with new organic products that are new. They're also in crypto. Crypto's done really well. They are gamifying, the whole investor experience. Their volumes are really good, volumes of trades. So with a year of 2024 being so positive, I think Robinhood's going to announce very positive earnings when they announce their earnings for the full year of 2024. In fact, what date are they going to announce? February 11th. So we're a little over a month from that happening. All right. So we've got really good revenue growth. They've grown to be a $2.4 billion revenue company. They are profitable. And look at that cash. That sweet cash, $2.19 billion of free cash in the trailing 12 months. Nicely done. When we look at they don't have a gross profit because they don't make a product. They're more of a service company. Their profit margin is 21.8, which is very good. And they generate a lot of free cash. So we got good free cash flow, a growing business at 35%. Analysts believe in the company. 16 analysts cover the stock. And there is some disagreement on the value of the company. We've got some bulls that believe the stock is worth $55 per share, and some bears that think this stock is way overpriced. It's worth $11 a share. But on average, they would be saying that the stock is fairly priced. What do I think? Well, I look at the fundamentals and principally looking at free cash and then having a little bit of the valuation focused on earnings per share. Based on free cash, this stock's discounted by 83%. And what I've done is I've taken what I think is a reasonable forecast of cash, and I've grown that cash by about 20% in the first 4 years, but then after that, only 5%. And if this company operates the way they've been operating, it's just worth a lot more money because they're growing so quickly, and they're growing that free cash so quickly. Really, nothing stands in their way other than a terrible stock market that could slow them down. But this one here just looks really good from a free cash flow perspective. They only have cash. They don't have any debt on the balance sheet. So their free cash flows are actually worth $63.8 billion, far more than their market cap. And their value per share is much higher than their current stock price. So it's discounted by 83%. Overall, I still think it's discounted by 53%. I bought shares last week when it was selling off. I'm really glad I did so, especially since the first day of trading in 2025. My shares that I bought recently, as well as the shares that I owned already, went up close to 6%. So that was great. This was the best percentage gainer in my portfolio today. So go Robinhood. Excellent. Android PC. Hood always seems too expensive to open position. Yeah, I can understand that, and I know exactly what you're talking about. But on this one here, the market did give us an opportunity where this stock, when it IPO'd, it received a lot of fanfare, and then it sold off. So for a period of time, the acquisition prices are really good, and more recently, it's really flourished. Once it started to go, it is really. If you're a value investor, long-term investor, it's always hard to buy into an appreciating stock because you'd hate to see it stop going up and then you're you maybe see losses in your stock price. So I totally get that. I've believed in Robinhood and continue to buy shares over time. And again, I bought more shares last week. But that's me. You do you, I'll do me. But I'm glad I own Robinhood. It's been a really, really good stock for me. So that's Robinhood. That was excellent day. Now, a stock that hadn't done so well for some time, but finally had a good day was Chevron. It was up 1.29%. It's a big oil company, big energy company. Market cap's really high at 263 billion. Revenue is 191 billion. And the PE is 16. That's a really reasonable PE. We just saw Coinbase and Robinhood way up. So I think that as we look at 2025, value stocks look pretty good. The PEs look good. Analysts believe they're discounted. So Chevron's a pretty good sized position in my portfolio. I own about $95,000 of Chevron. It's maybe the fourth or fifth most expensive or valuable position in my portfolio. Forward PE is 14.5. Again, very reasonable. Dividend 4.44%. Really nice income stock. And over the past year, it's down 1.64. So it's had a nice rise recently, principally because oil prices have been going up. As oil prices go up, oil companies do far better. And it looks like in the after hours, it's still rallying a bit. Chevron's a very good run business. I've been a stockholder for a long time. And these guys, their revenues have been coming down, but not because the company is operating poorly, but because oil prices have been down. In 2024, we saw oil prices really go down. And it's good for the consumer because I know gasoline prices were down as well, which is easier on the pocketbook. But an oil company will see its revenues go down when that happens. And that was the case for Chevron. The trailing 12 months, 0.56. But with these higher oil prices, we may see some green on the screen going forward, especially if they keep it rising. We're at around $72 per barrel of oil. If it keeps going up, maybe hitting 90 or 100, that'll be much more profitable for Chevron. All right, so Chevron has lots of free cash. It's always produced a lot of good free cash flow. And with that cash, it could provide dividends, put cash on the balance sheet, acquire businesses, which they have been doing. They acquire other companies within their ecosystem. Gross profits are around 39%, depending on the oil prices. Oil prices are higher, margins go up. And overall, it's just a good oil business. When it comes to Chevron, I believe they're discounted, but that's from memory. Let me take a look at my valuation spreadsheet. Yeah, I think they're discounted by 39%. The cash flows are just really, really good. And these guys are just consistently producing cash. Very, very modest growth of 3% on the first 4 years. And then after that, 4%. And when I look at that forecast of cash and discount it to today's value, it's 52% discounted. So that's a very good discount on Chevron. The earnings per share give us a modest discount of 14% based on today's stock price. So combined, it's still discounted. So I think Chevron has a lot of upside, especially if oil prices continue to rally up. I think oil companies are going to do quite well. And I'm glad that I've got Chevron stock. Again, another value stock. And I think value stocks are going to do well in 2025. So that is Chevron. So a stock that did well today and really catches my attention because it's where I have most of my portfolio invested, and that's Meta. It was up 2.35%. For the 1 year, it's up 69%. It's done really well. That's after it sold off back in 2022. It's really cranked up. So good to see Meta doing well. It is a $1.5 trillion market cap company, big revenue at $156 billion. And the PE seems reasonable for a growth company, 28 current year, and then forward P at 24.5. So analysts believe it is a strong buy, and it's discounted by 6.66%. They base it on earnings per share. The company's been operating well, growing at 23%, even though they're already a massive company. And 2023 growth was 15%. So a lot of green on the screen. 2022 was a down year. They were overly focused on the metaverse, and that ended up being a problem for them, which they corrected, and now they're growing nicely. They have very good margins at 81%. Go Meta. Awesome margins and awesome free cash flow. Expanding up to $52 billion of free cash flow in the trailing 12 months. $52 billion. Holy smokes. Beautiful number. So Meta just has fundamentals that are just so good. Analysts really like the stock. 43 analysts cover it. Man, $811 per share is the biggest bull analyst on the stock. And then the most bear analyst is at 360. And I'm probably, let's see where I'm at on the valuation of Meta. So I'm at a 43% discount. I think very highly of the company. And one thing that I believe they have that's not included in these numbers is the Meta.ai business. They have a very strong AI application that's getting a lot of user adoption. Well, nowhere is it in the fundamental analysis, but the future is really good for that app. So I think this is a really, really good stock for my portfolio. The only reason I'm not buying more is that I own quite a bit of it. It's the number one position in my portfolio. If it really comes down substantially, I will buy a few shares. But for the most part, I'm just holding my shares and seeing the value of those shares go up. So Meta Platforms just looking great fundamentally and from a business perspective. I'm really excited about their future and looking forward to seeing when they announce their earnings, which will be on January 30th. So that will be a very interesting earnings report for one of the biggest companies out there. Meta Platforms, getting it done on the first day of 2025. Looks like Sergio, good to see you. Happy New Year. I believe you joined in from Portugal. Very nice for you to join. I know it's a little late on your side of the Atlantic. So Meta got it done. Now let me talk about a few stocks that I bought today. Before I do so, let me just remind you, I've got a community going. It's people that go to my channel. We interact on Discord, obviously on live streams. We also have calls on weekends where we talk about stocks, we talk about investing, have a workshop on Saturdays to really improve our skill set about finding good stocks, running screens, and how to analyze companies based on fundamentals. And then on Sundays, we talk about stocks further and kind of set our agenda for the week. And you can be a part of it. There's 3 levels of membership. And if you can consider it, I'd appreciate it. One of the perks, if you are a paid member, is on live streams. Your name appears differently. And I really respond to members. If you have a request on a stock you want me to look at, I will definitely look at it and try to analyze it on the stream. And of course, you can contact me on Discord and or email or on the investor calls to talk about stocks and so forth. So please consider it. It'd be great to have you. All right. So the first stock that I'll talk about that I started to invest in is LMT, Lockheed Martin. And as mentioned, I think that value stocks are going to begin to work. And this stock really started to crank up when it was expected that Donald Trump was going to win the presidency. When he was leading in the polls, it just was expected that Donald Trump will be a big supporter of the military and that Lockheed Martin should have good revenues looking forward, which I don't disagree with. I think it was the right storyline. For some reason, the stock sold off substantially. So it came down to a price where I was willing to start a position of Lockheed Martin, and I started buying into the stock. It is a big company at $114 billion market cap, $71 billion of revenue. Their PE is really low. Again, value stocks are providing really low PEs. And this one has a pretty good story, which is that aerospace and defense contractors are probably going to do well under a Trump presidency. And I think, buying shares in this type of company is going to be a good idea for the next couple of years. They pay a dividend, and analysts think it's discounted by 27%. Looking at their revenues, it's a modest grower, but it's a grower, which is good. They have good margins. They have very good free cash flow. Cash flow level is very, very good. Gross margins are quite a little low, but it's a defense contractor. So they have high revenue amounts. Analysts think, and how many analysts cover the stock? 11 analysts cover it. Some analysts think it's really going to go up. Even the most bearish analyst thinks it's going to go up. So overall, all analysts think it's going to go up. I also think it's going to go up, which is why I bought it. In 2025, we're expecting revenue to grow as well as profits to expand. So that's a very good sign. For the next 3 years, revenues are going to grow, profits are going to expand. Looking at my valuation compared to the current stock price, I think it's discounted by 27%. So I'm agreeing with those analysts. And most of my value comes from free cash flows. And the free cash flows just look excellent. I'm growing them modestly by 5%, which is reasonable. And when I look at earnings per share, I agree with the analyst. So overall, 27% discount on one of the most trusted names in aerospace and defense that has a very good environment going forward with a president that is really supportive of the defense, a market that's really expensive when it comes to technology and other sectors that have grown really fast, but has left value stocks behind. So I'm willing to pick up companies, great companies like Lockheed, at a really good price. I will take it, put it in my portfolio. Hopefully it'll go up in value and reward me over the long haul. So that's Lockheed Martin. I'm glad I bought shares today, and we'll be buying more shares. I'm going to dollar cost average into Lockheed Martin and probably build up a position of $10,000, but I could easily move it up to $50,000 because Lockheed is a really, really good name. I've known of them for a long time. I invested in them a couple years back, did well, but got out of it, and now I'm back. So that's Lockheed Martin. The next stock that I started to buy into took a while, but I wanted to own a railroad. Railroads have very strong barriers of entry. You just can't build new railroads. There's only a couple of them, and Union Pacific is one of them. The stock, for some reason, has gone down over the past year. The past 5 years, it's kind of gone sideways. But a lot of super investors own railroads because they have those really strong barriers of entry. This stock is discounted according to analysts, and I'll show you my valuation. This is a big cap stock, 138.9 billion. Revenue is $24.29 billion. PE is, I'm going to say, reasonable at 21 for the current year, and then 19.57 for the future year. The dividend is okay. I'm not a big dividend investor. Dividends are okay, but I don't use them in my valuation. So when we look at this company, you see that over time they've gotten bigger, which is good. Let's take a look at their margins. Gross margins are good for a industrial logistics or transportation company. Those are very good margins. And free cash flows are always good with Union Pacific. Just excellent free cash flow. So I like that about them. So that's really good. Free cash flow margins are good. And when I value Union Pacific, it has a good valuation. This is a good, steady stock. Again, I'm looking to add to my portfolio to try to have a good year in 2025. I think I can get there with some value stocks. I think it's discounted by 24% looking at today's stock price. So that's why I started to buy. I don't expect on doubling my money in 1 year here, but I think I could reasonably expect that I have a good shot at doubling my money over the next 5 years with Union Pacific. It's a really good company. I'm glad I added it to my portfolio, and I'll grow my investment in Union Pacific quickly up to $10,000 and probably look to increase that investment over the next couple months. So Union Pacific is an addition to my portfolio. I'm glad I finally got into it. It's taken a while. I've probably followed this company for 3 years and finally decided this is the right time to get into Union Pacific, and we'll see how it goes. We will see how Union Pacific goes in my portfolio. All right, so those are the stocks that I wanted to cover. Let me think if any. Mercado Libre is also a stock. I didn't start buying it today, started buying it last week, and it had a good day today. Mercado Libre, I've been following it for about a year. It's certainly been getting a lot of attention over time, and it's done really well. For the last couple of years, the stock is up 177% if you go from its low point in 2022. So it's done really well. In the past year, I started to really look at the stock, but it really jumped up, and I wasn't sure I should be buying into this really pumped up stock and decided not to buy it. Instead, I bought Amazon, have been buying into Amazon, and I was already an Alibaba stockholder. But recently, it really came back down. So I thought it was a good opportunity to start buying. So I started buying into Mercado Libre. Started buying into it last week. So it was nice to see that over the last couple of days, it's really done well. It's up 3.8%. So it's nice to see that it's had a nice little pop, nice little short-term gain on Mercado Libre. But it's a long-term gain that I want to play. I totally see Mercado Libre more than doubling in value over the next 5 years. It is a really good company located in Latin America, really focusing on providing e-commerce for Latin America. It's a really good idea. Obviously, Amazon's the leader in the space, and Amazon's the leader here in the US. Alibaba's the leader in Asia. They're doing great. And having Mercado Libre in Latin America was a good idea. So I'm glad I bought shares, and I will be trying to buy into Mercado Libre quickly, maybe getting up to $10,000 or $25,000 of stock value in the next month or so. And we'll see where it goes. Mercado Libre has good value. I like finding businesses that have a very good story. All the stocks I've shared with you, I believe in. I think they're good companies in their space. Oftentimes, they're number one in the space. In the case of Mercado Libre, they're number one in Latin America. They really know how to sell to Latin America. They know how to market to it, sell it, and then get product to the customer in all those different markets. They are a little bit expensive, $89 billion for a New York company, revenue of $18.5 billion. PE is 62, and forward P is 47. It is discounted according to analysts, and it's a strong buy. Over the 1 year, it's only up 12%. You could see that at certain points it looked great, but then it's pulled back. So that pullback is what pulled me into the stock. A better price on the stock really made a big difference. Revenue growth has been excellent for Mercado Libre. I love the revenue growth. Really good upward trajectory on that top line revenue. And revenue growth means more customers like Mercado Libre. They're getting more net new customers to use their platform. All those things really bode well for the company. Free cash flow of $6.19 billion. And you can see that they really grew their cash flow. Awesome. That is great to see cash flow go up. Gross margins are really good, mid-50s. So those things, their fundamentals just look really, really good, which is why I really like Mercado Libre. Now, analysts, 15 of them cover the company. And on average, they think the stock is discounted by 27% based on their earnings per share. It's expected that the company is going to continue to grow their revenue and expand their margins. Very good. So those things look really good. And when I value the company, I have a 31% discount on the stock, which is why I'm buying it. And it's principally because their free cash flows are really strong. I think they're going to expand them. So I'm glad to buy into Mercado Libre. It's a good company, expanding in Latin America. And I will be buying shares quickly of this leader of e-commerce down in Latin America. So that is Mercado Libre. All right. Thanks for joining. I appreciate it. If you just joined, I've got a community of viewers that we get together on live streams, as well as on weekends. We talk about stocks and also how to just improve our skill set of being investors, long-term investors that make money year after year. And you can join $10 per month, $25 or $100, depending on your level. You would get different levels of perks, and which include, you can message me if you want to look at a particular stock. I'll put it into a live stream or cover it on the weekends, or just give you some comments over a message, and as well as other things that you can take a look at the details that I put into the live stream and join. It'd be great to have you. All right, so we went over Mercado Libre. Healthcare did okay, but it wasn't like a big winner. There was one good winning stock for me, and that was Catalyst Pharma. It had a nice up day of 3%. And this is a biotech company that is really growing well, has really strong products. It's a $2.57 billion market cap company, so it's a small cap. Its revenue is $460 million. PE is really low, even though it's a high growth company. These PEs look really good. Analysts believe in the company. They believe it's a strong buy and it's discounted. I think it's a great company, growing really fast. It's up to $460 million of revenue. In the trailing 12 months, growing 32%. I like that growth a lot. And I also like the fact that they produce really good cash flow and they just started producing it. Or actually, they did have cash flow in the past. They just started to expand it. Gross margins are excellent at 84%. Wow. That is just really good gross margins. Analysts really look at that earnings per share and their growth. Some analysts cover this stock. They think it's discounted because the company is going to continue to grow and be more profitable. So those two things are going to make this stock, I think, really perform well. When I look at their valuation, I still think they're very discounted at 57% discount because their cash flows are just expanding really well. They're smaller companies, so I discount them at a higher discount rate, higher risk. But I think their cash flows are going to expand nicely at 15% for the first 4 years, and then after that at 4%. So their discount's really good if you look at free cash flows. And their earnings per share also looks really good. So overall, it's just a good stock for my portfolio. And when you look at their performance for the 1 year, it's up 28%. For the 5 year, it's up 473%. So this thing is just doing really well. And I hope it continues to go up. I expect it to go up and we'll continue to buy shares on pullbacks. This has been a good winner for me. So that's Catalyst Pharma, an awesome biotech company. Hey, Michael Anthony, thanks for joining. I don't have a set time right now. I have set times for the paid investor calls on the weekends, but I live stream when I can during the week. And I had some free time this afternoon. I thought I'd jump on, talk about today's trading. I have to admit, today's trading was interesting to have the stocks open up higher and then come down. The going down part, I think, is a continuation of the sentiment that we're seeing in the market, which is that stocks are expensive, especially in technology, especially in consumer discretionary. We're seeing stocks pull back. How far is that pullback going to go? I think it could go down 10%, 15, 20%, or it could, maybe go sideways and kind of stabilize at this point. But I think the sentiment that I'm picking up on is I could see a sell off again tomorrow and continue to sell off. Maybe get to 10%, and then we'll see what the market does after that. Negative 10%. So we'll see. We'll see what happens. All right. So it was a good day for my portfolio, even though the stocks were down. It was nice to see a lot of my stocks did go up. And I would say that the stocks that went up were, the one that I haven't talked about is Uber. Uber went up. I have a big position in Uber. It's one of those stocks that I have felt has been misunderstood. Uber is being counted out because Robotaxi is supposed to come in and kind of run them out of business, which I kind of laugh at because Uber is so big now. They're a huge player and their network effect is really powerful. They're a $133 billion market cap company, revenues of $42 billion. That's some revenue for you. For the past year, only up 2.6%, but you can see that they were up substantially higher for certain periods of time. But the market sold them off. Really, I guess the narrative being that Robotaxi is going to put these guys out of business. I don't agree with that. Their PE is 31, forward PE is 29. They have very good growth on a very big number. So they continue to get bigger. The network gets bigger. Customers like the service. And this is a company that doesn't have to buy cars to expand. It expands by getting more people to be, gig economy workers and bring in their own car and drive people around. Their free cash flow is awesome. They just have excellent free cash flow. Look at the growth. They went from being negative cash to now generating upwards of $6 billion of free cash in the trailing 12 months. That is a lot of free cash. Very, very desirable company. When we look at their evaluation that analysts put out there, 34 analysts cover the company. And they think it's discounted by 45%. I agree with them. It's discounted. I just think it's discounted by more than 45%. They're expected to continue to grow their revenue and expand their profits. What's there not to like? Such a nice stock. And Michael Anthony, you like Lyft better. So let's compare the two after I get done showing you what I think Uber is priced at. So I think they're discounted substantially by 93% because those cash flows are expanding so fast. This company is going to be worth a lot of money. And I am gladly buying more shares of Uber on pullbacks. And today had a very good day. A very, very good day. Let's compare these guys to Lyft. And I'll give you my comments. Again, they're just my comments. And we can disagree, which is fine. I would love to hear your comments. And, Michael Anthony, can you tell me why you think Lyft is better? What aspects of Lyft do you really think are more desirable than Uber? So these two stocks for the day trade in similar patterns. For a while, it looked like, Uber was doing a little bit better, but they've kind of come back together. So there's the two. Over the 1 year, Uber's done a little bit better, and Lyft hasn't done as well. Over the 5 year, Uber's done substantially better. I can tell you why I own Uber instead of Lyft. That's because Uber is winning the war to create the biggest network of ride sharing, to have more customers, to have greater coverage. And Lyft is being left behind, and they're becoming less relevant. At some point, Lyft will be pretty much a non-player, in my opinion. And that's the power of being the number one network out there, which is Uber. Uber will also have the power to negotiate with the likes of Google with their Waymo service. They've already have 2 cities they're going to partner with Waymo, and Waymo will be offered on the Uber app. So that's how I think they're going to grow in the robotaxi space, which is partnering with other players. Uber's also partnering with a Chinese autonomous robotaxi producer, and they're going to launch that service in the Middle East in one of the big cities. And you like Lyft because it's cheaper. Got it. Yeah. Now, buying the second best player or the third best player at a cheaper price may not be a great idea. You think about, and I'm going to leave this guy open up a new browser. So most definitely Meta is the number one player in their space. And you could say, well, Snapchat was number 2 for a while. So let's compare them against number 2. And Snapchat over the last 5 years, it did really well. It's come down hard. The difference in performance is well over 200%, the difference between owning Meta and Snapchat. So having the number 2 player, if the number 2 player is growing faster than the number 1 player, I could totally buy into that. But let's look at growth rates. Let's look at Uber growth and look at the size of it and compare it to Lyft. For all I know, we're going to finish this and you're going to convert me. I'm going to be like, I'm buying Lyft. And I'm going to give all credit to Michael Anthony for all the money I'm going to make. But maybe not. Maybe Uber is the right choice. Let's take a look. So the market cap is very different, right? This is a 5 billion market cap. Uber is gigantic compared to that. It's really grown. These two companies started around the same time. So the number one player is just really expanded fast. The number two player revenues are not that far different. Well, no, they are far different. It's way lower at $5.45 billion. PE, I think they lost money this year. Forward PE looks pretty good at 13.5. They are growing nicely in the most current quarter. They are small. It's easier to grow when you're 1.5 billion versus much bigger. So 31% growth is very good. I like what I'm seeing. This is a value play within ride sharing. Growth looks very good. Now let's take a look at margins and free cash flow. So free cash flow is positive. That's very good. And they're growing. The gross profit margin is 33.8. Very good. I think Lyft is a good opportunity. I think it's discounted substantially. When I look at the growth rate and I look at that free cash, this company could be valued at $10 to $12 billion, and it's only at 5.66 billion. Let me check the balance sheet just to make sure we're not sitting on a pile of debt. They're just going to bring us problems. No, more cash than debt. So I respect your investment in Lyft. I think it's a good stock. I think it's discounted. I think it's solid. So cannot argue with it. I believe both companies are headquartered in the Bay Area here in California. So I think either investment is a good one. I'm going to stick to Uber. I like going, if I can, with the number one player. The number one player has the biggest network, and they have grown much faster than Lyft. That is without argument. Lyft has been left behind, which is why you saw the stock really suffer over the long haul. You see the big separation there over time is that Lyft just did not grow fast enough. It had its problems, but I think Lyft is looking like a good stock. It could rally and you can have a very good 2025, especially if they keep executing the way that they've been executing recently. You look at, 25% growth over the trailing 12 months, 31% in the most recent quarter. And these are excellent execution numbers. Very nice. They had some restructuring cost, probably downsizing their company a bit. But the free cash flow is there. It's a good looking stock. Cannot argue with it. Good luck with it. I'm glad you brought it up. It was a good argument with two winners. I'm a winner. You're a winner. Two good stocks. Grab is like Lyft and Uber, but have I looked at Grab? Let's take a look at Grab. I'm not familiar with Grab. So these guys operate in Asia. Okay. 19 billion market cap. Impressive. They're bigger than Lyft. Their market cap is higher, but their revenue is lower than Lyft. So it goes to show Lyft, I think, is nicely discounted. Forward P is really high, 158. Holy smokes. According to analysts, it's still discounted. But the growth is not all that impressive. Why is it so expensive? I mean, it's a small company and you're growing at 21%. It's a small company. So it's a very good number, that growth rate. But, you're looking at Uber is growing at 13, 16%, and they're massive compared to these guys. Free cash flow is there, very good. Gross margin's good. I think these guys are overpriced. They're overpriced. Just high level, I think they're overpriced. Can't argue with Lyft as an investment. I think these guys are discounted. It's just a matter of, is the market going to reward Lyft? It's number 2 player. It hasn't been able to keep up with Uber. I am comfortable with my Uber investment. We'll continue to buy shares. All right. So we went over Uber. Uber had a good day. And hey, everybody, thanks for joining. It is great to have you. And I appreciate all the questions. It's a lot coming at me, so I apologize that I can't cover every comment. For anybody who just joined, I do have a community. If you'd like to be a member, I'd really appreciate your consideration. You get really nice perks, and I could really appreciate the support. I got a $10 program, $25, and $100. And I try to make the perks really valuable for investors, helping investors grow, get better, become better investors, and over the long haul, really build wealth. So that's what I try to do. That's what I've done in my career. And hopefully you become a member and I get to communicate with you. So thank you. All right. So another winner chicken dinner for me was United Therapeutics. I love talking about this company. So United Therapeutics, $16 billion market cap, $2.76 billion in revenue. Look at this PE, 15.85%, and then 12.43 in 2025. Those are really reasonable PEs. It's gone up 63% in 1 year. It's gone up 309% over 5 years. And look at these PEs. Well, when we look at their growth, look at this growth, beautiful growth. $2.7 billion of revenue. We have gross margins of 89%. Gross margins, beautiful gross margins of 89%. That is awesome. Free cash flows are expanding. What is this company? Who is this company? What the heck do they do? And I love talking about them because, in a way, the story behind them is inspiring, and their science is just so impressive. So the person who started this company, that person had a daughter that had this rare illness, and basically the daughter was going to die. And the person left their career in communications, big high-powered executive that started a company that ended up being, I believe, the Siri network, through satellite radio, and started to study the science that ended up reaching a cure to that person's daughter. That drug is now commercially available to others. And the same person started this company to try to go after rare diseases. And that's what they do. So they have drugs in particular spaces that help people with these rare diseases. Here are their drugs. They're very successful. They also do transplant, support for organs. But the thing that really makes I'm just so impressed that they are looking to have a business where they artificially grow organs in a laboratory. I'm trying to find the right page to show you that. These are some of the devices. So if you have a transplant, obviously you have to get it from the donor to the person who's going to receive it. Yeah, I'm not finding it, but well, maybe one more try here. Give me one more minute. Yeah, I'm not finding it, but it's basically organ xenology. What they're doing is they're growing organs, and at some point they can grow an organ that would be transplanted to a patient. They're getting close on, I believe, heart valves and things like that, but they're going after the full, organ in some cases, which is so impressive. So that's United Therapeutics and their business. Yeah, there it is. Expanded availability of transplantable organs, treatment of rare diseases. These guys are just the real deal. Really like the company. Fundamentals look great. They have a very visionary future. I think that they're just getting it done strategically, getting it done fundamentally. It's a really, really nice company. I'm glad I'm a stockholder. They're growing really nice, really good profits. And I think they're a really good stock for me to have. Continue to think they are being sold at a discount because their free cash flows just drive a lot of value. I think it's discounted by 22% when I measure their cash flows, discount them to today's value, and look at the current stock price. And the earnings per share is even better. Better discount because the earnings per share are really positive. And overall, I still think they're discounted by 29%. And this company just keeps expanding, getting more attention. Really like where they're going. Bad Omen. Good to see you, man. Thanks for joining. So that is United Therapeutics. Great to see them fly high today. They had a good day, up 2%. After hours, they continue to go. This is a day when, the markets were down. So I just talked about 10 different stocks that were just doing really well. So there's always good stocks that are going to flourish. I think this year, the flourishing stocks may not be the usual suspects of the last 2 years because the stock prices of some of those growth stocks are really high. And man, it's hard to imagine that they're going to keep going up when those valuations are so expensive. So these stocks are doing well. Stocks that I think are really expensive and overpriced substantially are stocks like Palantir. Palantir has a PE of 376. Incredible. How can a PE be 376? But don't worry, the forward PE is dropping to 164. That's very high. But the stock flourished. Just people are really excited about this company. But I just showed you how many companies that had better growth rates than this. Just showed you 8 companies that were looking better than that on a revenue growth rate. This isn't a very big company. So I think the enthusiasm may be misplaced, or maybe I'm missing something big because this is not incredible growth. This is just growth for a small business. I just showed you 8 companies that are matching this growth or even doing better. The company Lyft that Michael Anthony brought up had better growth than this, but Lyft is not seeing this type of euphoria around its stock. So what gives? How come investors are so crazy about this stock, but the fundamentals tell a different story? Even analysts are saying it's overpriced by 50%. So I wonder what's going to happen. Is this stock going to crash and burn in 2025? We will hear more on February 3rd when they do an earnings. And we will see. Over the long haul, in the short haul, the market is a popularity contest. It's a voting machine. Investors decide, hey, this is my favorite stock, I'm going to buy it. Or, hey, everybody else is buying it, I'm going to buy it. And things get pretty played up. Stock prices really go up in the near term. But over the long haul, it's all about fundamentals. You weigh the fundamentals, free cash flows, profits, cash. Those are the things that matter growth rates, revenue growth rate, dominance in an industry. All those things show up in the long term. And we will see if Palantir can grow into the valuation that they now have, or if they will come back down to earth and punish investors that have either stayed too long or bought too high. We'll see. So far, investors must be loving life. Hey, man, I bought Palantir and it's rocking. Michael Anthony, this is market is dropping in the way. Let me try to read this a little better. This market dropping in the way it been doing, and like oil might be the best start buying. I think the market's going to keep dropping to some extent. That's my guess. You know, I could be wrong. Tomorrow, the market may say we're gonna go up, and it goes up. But I have a sense that a lot of investors are taking profits now that we're in the new year, 2025. You don't have to pay taxes right away. You can wait a year before you pay your taxes. So that's an incentive to sell if you're sitting on a large gain, for example, on Palantir. So I think that's going to happen in the month of January, is a lot of profit taking and people getting out of positions where they're doing great. They're really up on NVIDIA, up on Palantir, up on, you name the stock that's been rocking and rolling. And that could happen. That can definitely happen. I think there's, in my opinion, I expect the market to sell off more than I expect the market to continue to rally. It doesn't take a scientist to see that, the market's just really flourished. For the last 2 years, it's up. The NASDAQ is up 83%. So it's flourished. Great. I've invested way back here. I've made lots of money here. Awesome. Well, what goes up has to come down at some point just to correct, just to get rid of some of the stocks that are just overly priced. Like in this case here, from the top to the bottom, the NASDAQ sold off 35.7%. That happens. That's natural. That's supposed to happen. It's a natural cycle of stocks. So that's what's going on in the stock market. I think it's going to be a good year. It was an awesome year in 2024. And what's cool about investing is every year, if you put time into learning and you have a process, you're going to keep getting better and being more in control, be more economically empowered, be a part of the investor population in the U.S. Investors feel great. Investors that are sitting on gains, you ask them, how's the economy? Oh, it's doing great. How do you feel? Do you feel economically assured? Absolutely. Because when you're a part of the investor society, you have decided to empower yourself by investing in things that you get to control. Things like stocks, real estate, bonds, cryptocurrencies. So that way, when these appreciation bands work, you're sitting on big gains. You made big money. And what's fun is you're not done. You look at the next year and you're ready to go. Let's do it again. Let's go make some more money. Let's see our stocks go up even higher. So if you ask the investor society how things are, their response is probably going to be very favorable. Things are good. And unfortunately, there's a lot of folks that do not invest. They either are afraid of it, don't like it, are intimidated by it, are opposed to it for whatever reason. And if you ask them, how are things? Oftentimes I hear that they're under threat. They feel threatened. They feel exposed. They feel like they're falling behind. They feel like everything keeps getting more expensive. Everything keeps getting higher and higher. And in a way, they're right. Because that's how things tend to work, right? When you have inflation, and we've had inflation forever, things continue to go up. So being a part of the investor society, you empower yourself. in order for you to learn, continue to get better, continue to be a better investor. And when periods of time like the last 2 years we've seen, you get to ride this awesome wave of wealth creation. That is exciting. That is awesome. For all the people out there that are of younger age, I'm 56. I've ridden this wave for a while, and I still love it. I've gotten a little smarter, a little wiser over time. But if you're a young person, realize that over the long haul, if you continue to learn, if you save, continue to save, and live within your means, you're going to do great. But just commit to learning, commit to understanding. YouTube makes it so easy to learn now. Read some books and save your money. And I know that being young, you want to buy cool stuff. You want to take cool trips. You want to buy a cool car. Not saying you not do that, but I'm saying always save more than 10% of your money. Always, every month. If you do that, you'll never run out of money. You'll always have plenty of money. You'll learn to live within your means. Learn to take on better jobs. Make more money. Start a business. All those things come together over time, and you will create wealth. And then you'll become, if you're like me, I played sports growing up, loved it. I watch sports, love it. My favorite pastime now is investing in stocks, cryptocurrency, and real estate. And there's a real scoreboard for me, and that's making money. How much money do I get to make in a given year, in a given quarter? So these 2 last years have been phenomenal. Great wealth creating years. Really, the last 20 years have been wealth creating years. Many times you hear people talk negatively about risk and how stocks are risky. Now, I don't want to remove the fact that investing takes risk. But when you look at a market, you look at stocks and they did this is real. People tell you in the 90s when I was a youngster going away to college, don't invest in stocks. They're risky. Well, at that point, that advice cost me 4,396% of appreciation of wealth creation. Well, let's fast forward. I graduated college, mid-90s. Let's say I'm about 5 years out of college, and people are like, don't invest in stocks. They're risky. Well, that advice would have cost me 400% of wealth creation, and so forth and so on. And then my kids were born. I'm raising my kids. I love them to death. I want the best for them. Don't invest in stocks because they're risky. That would have cost me 743% of wealth creation. And very recently, from the year 2020, don't invest in stocks. We got COVID. It's risky. I would have doubled my money from that point, which I did. So that's where stocks can take us. But it does take a level of commitment, putting in time, learning how to invest correctly, learning from mistakes. You're not going to pick winners every single time. You're going to pick some losers. You're going to pick some winners. Learn from all. Hey, this stock worked. What did I do right? What did I do wrong? And have a good process. If you watch my videos, you'll see my process. Keep it simple. Learn. Everything that I do, you can learn. You may not learn it in a day, a week, and a year, but over time, you will learn it. You'll learn your style, what strengths you have as an investor, and how you can make money. Michael Anthony, Chewy buying the dip. So Chewy, huh? Chewy is the pet company. They have like a website. Yeah. Up 51%. Boy, it's really sold off from the COVID days. So in the comments, I would want you to tell me, Why isn't Amazon going to put Chewy out of business? And I don't disagree with your investing. I think Chewy looks good. I think it's a good business. I like their category. They're dominant in their category. But I think, pet owners love their pets. But could you find the same stuff on Amazon? If you can, it's like, man, Chewy, you're going to have a hard time. Because I'm sure every family that has a pet obviously is buying Amazon as well. So they might go to Chewy. Hey, I really like buying this premium dog food for my dog and things for my dog. But you know what? I'm always on Amazon too. So might as well get it on Amazon. Or at least you shop Amazon to try to get a better price. So what type of pressure is Chewy receiving from Amazon? So not arguing with your investment. I think, if we look at Chewy, it'll probably, price quite well, but it's back to that Lyft example, Lyft versus Uber. Is Chewy always going to be kept at a certain size? Because if it grows any bigger, then Amazon's going to come in and pay attention to that category and take it away from them. I don't know, but that's one thing I would put out there for you. It seems like you're a smart dude and you're doing a lot of homework on your stocks. So that's one question I would put out there for you. Man, we're up to 26 people on the live stream. Thank you so much. Thank you for starting 2025 on my first live stream of the year. I have a community of investors. We come together, we learn, we get better, become better investors, and make money over time. You can be a part of the community. If you're a paid member, you get invited to sessions on weekends, and I encourage you to consider it. 3 different levels. Please take a look in the description of the live stream. All right, everybody. Well, I'm going to shut the stream down, not because I'm not having a good time, but because it's dinner time and I wanted to go have some dinner. But I really appreciate you guys joining. I appreciate the questions, and hope that you join me again on a future stream. I hope you can become a viewer of my videos and comment on videos. I'll respond to your comments on videos. And I hope you become a paid member. It'd be great to see you on the calls and discuss investing, discuss processes to invest in stocks, fundamentals, how do you analyze fundamentals, and so forth. All right, everybody. Let's see what happens tomorrow with stocks. See if the sell-off continues or if we're going to have an update. We will see. And I appreciate you joining. Everybody, have a good Thursday night.